right, welcome back to the Tech Corner this week. I'm George Silla, Senior Markets Contributor here with the Schwab Network. This week we're going to be highlighting Meta Platforms. Meta Platforms, formerly known as Facebook, is the world's largest social media company and is a classic two-sided platform with an advertising-based business model. The family of apps segment includes well-known platforms such as Facebook, Instagram, Messenger, and WhatsApp, which collectively enable users to connect, share experiences, and engage in public conversation. These platforms serve as a major revenue generator primarily through advertising. Now, the company is in the forefront of developing products and technologies that facilitate human connection and interaction. The company also partners with application developers to add functionality to their websites and allows users to pay for virtual goods and services through its payments function. In terms of size and scale, by the end of March 2025, it's remarkable that Meta has more than 3.5 billion monthly active users, more than 40% of all humans across its four main social networks. Advertising generates more than 95% of total system revenue, and the company derives about 55% of its revenues overseas outside of the United States and Canada. Now, when it comes to competition, there are several significant players in technology and digital advertising landscapes. Now, these competitors include Alphabet, which is known for its YouTube platform, Microsoft Corporation with LinkedIn, and also Amazon in the e-commerce and digital ad space. Now, all of these companies rival Meta in various domains, such as digital advertising, AI development, as well as cloud computing services. The current social networking market also includes other popular platforms such as TikTok, X, formerly known as Twitter, Reddit, Snapchat, Pinterest, and a host of other smaller niche applications like Discord. Meta's unique value in the market stems from its extensive user base across its family of apps, which facilitates unparalleled reach and engagement. The company's strategic focus on AI-driven innovations enhances its advertising capabilities, offering precise targeting, improved ad performance, while shaping the future of social interaction and digital advertising. Similarly, Meta can monetize its Llama open source large language model, where it is now partnering with the likes of Microsoft and Amazon to make it available for both research and commercial use. Additionally, Meta's foray into virtual and augmented reality through Reality Labs sets it apart as it pioneers in creating immersive social experiences and next-generation computing platforms. Now, in recent news, on April 30th, Meta posted Q1 2025's earnings and revenues. Revenues came in around $42.31 billion, higher by 16% year over year. That beat the estimate by $950 million. EPS also beat the forecast by $1.18 per share to $6.43. On an adjusted basis, this was higher by 36% year over year. The truly impressive thing about Meta's Q1 results is the company's continued growth at scale. On a user base of 3.35 billion, the company added another 80 million users in Q1, its best user growth since Q1 2021. Now, in terms of spending, Meta again raised its 2025 CapEx guidance to between 64 and 72 billion, up from previous guidance of 60 to 65 billion, implying an 82.5% increase, while at the same time Meta lowered its 2025 total cost guidance by $1 billion, which was well appreciated by investors who bid the stock higher after the report. Now, when looking at Meta, there are many positives to consider. First, its transformation into a capital-efficient AI-native platform is boosting margins and accelerating EPS growth, with AI driving significant improvements in ad targeting and monetization. As the company continues to increase its capital expenditure guidance, this signals confidence in AI infrastructure investments, which are expected to deliver robust returns and support long-term growth. Meta's diversified advertising moat and strong advertising business continues to drive growth, with AI initiatives positioning the company well for future expansion in the digital advertising landscape. The company also demonstrates robust growth, with year-over-year trailing revenue growth at 19% and the forward EPS growth of nearly 22%, projects a strong increase, highlighting the company's successful expansion strategy. From a profitability standpoint, the company also excels. It boasts a net income margin on a trailing basis of 39%, which is substantially higher than the sector average of 3%, and nearly 900 basis points higher than its 5-year trailing average. Now, aside from the positives, we also have to address some concerns about the business. First off, Meta's increased capital expenditures, while aimed at enhancing AI capabilities, raises concerns about reduced free cash flow. Now, reverting back to the last corporate report in April, Meta's spending plans would imply a capital intensity level of 36% in 2025, up from 24% in 2024 and 20% in 2023, by far the highest among the hyperscalers. Another concern to consider is Meta is vulnerable to regulatory backlash in the United States and globally, related to antitrust and privacy concerns, which could materially impact Meta's business model and revenue. This may also lead to potential modifications required for its no-ad subscription model. The ongoing losses in the Reality Labs segment, alongside macroeconomic uncertainties, prevent financial risks that could affect Meta's overall profitability as well as growth trajectory. Now, from a technical analysis standpoint, the stock momentum is strong, with a one-year price performance of over 30%, which indicates bullish sentiment and strong investor confidence in the company's prospects. Year-to-date returns are also positive, outpacing the broader market, S&P 500, as well as the NASDAQ 100. Now, after earnings, the stock is once again trading above the 50 and 200-day moving averages, which indicates the intermediate-term price pattern remains positive after the year-to-date decline lows were established at roughly $480 in the third week of April. Now, from an indicator standpoint, the daily RSI is above 50 and rising, which also suggests the technical picture is improving alongside the broad market. Now, in summary, we have to consider that Meta is an inherently very profitable business, increasing so with scale with billions of users across its platforms. The company has compelling potential of AI monetization across advertising, engagement, business messaging, and devices, which is an ongoing emerging opportunity. Over a long horizon, analysts expect positive returns for investors as the company provides valuable immersive social experiences while expanding its global influence for years to come. Now, in the next episode of the Tech Corner, we will highlight the semiconductor space and look at advanced micro devices. The company's been in a downtrend thus far in 2025, but recent earnings and guidance suggest the company's outlook could be brighter. All right, that's it for this week's edition of the Tech Corner. Please like and subscribe to the Schwab Network. I'm George Tilla, Senior Markets Contributor here. See you next week.